So Nifty has broken 24,000 level and you might be scared a bit because I know we are long-term investors, but only when the market does not crash. When it crashes, then we get scared a bit. Now the important point is why exactly is this market falling, and more importantly, what exactly you should do in the current market. And that is the reason I'm making this video. In this video, we'll cover both the aspects. The first part is why is the market falling or crashing, and the second part, which is more important, that is what exactly you should do. What should you buy, should you sell in the current market. At the end, I will also tell you what exactly am I doing in the market. In the last 1 week, I have invested a lot of money in the market. I want to tell you transparently what exactly I have done. If it makes sense to you, you can also do the same. It is not a recommendation from my side. Do your research, talk to your advisor before doing that. Now let's begin. Let's start with some data. Check out this. This is the data from Sensible and this is FII DII data. FII is foreign institutional investor, basically the people outside India or the investors or institutions outside India that are investing in India. And DII are domestic institutional investor. They could be mutual fund houses based in India and the domestic institutions or retail investors investing in Indian market. Now check out this data. If you look at the daily data, you will see in the last 1 month, check out this blue bar which is going down. Check this bar. The FIIs have been constantly selling in the Indian market. And how much? Look at this. From if I see October 1700 crore, if I see 16th October 3400 crore, and every single month you would see, every single day you would see there has been some selling. If I show you the monthly chart, in this chart as well, if you look at September 23, this is 2023, there was some selling, some buying, selling. But if you look at October 2024, record selling has been done. 1,14,000 crore worth shares have been dumped. FIs have actually sold this much. In November, in just 14-15 days, it is already at 29,000 crore. And the result, since they have been selling so much, the Nifty has corrected by 6% in October and already corrected by almost 3% in November. And this happens whenever there's a lot of selling pressure in the market will crash, and market actually is very strongly related to FII and DII activity. Now, I'll show you something else. Look at this bar, which is September, when FII DII both were buying. And when both buys, which basically means the market is very attractive, then Nifty goes up. You see 2.2% gain here. And interestingly, if we go back in time and we see here in December 2023, FIIs were buying more than DIIs. And the result, the market just skyrocketed. 8% return in just 1 month. Now, I said FIIs have been selling a lot. A lot of selling pressure is created. And if that pressure is created, why exactly is that created? And the reason is the Chinese market and the US market has become more attractive. Let's talk about Chinese market. And for that, look at this piece of data. Look at the P ratio of China. If you look at China's Shanghai Stock Exchange, the P ratio of that right now is 14.3. If you look at this graph, in fact, China used to trade at like 17-18 P. If you see Jan 2021, Jan 2022, it was around 17-18 P. But then this crisis happened in China and then the market corrected a lot. In fact, in the last 2 years, there has been zero return, in fact, minus return. And the market dropped from the 17p to almost 11p. And now it is going back up to almost 14p. So basically, Chinese stock market P is at 14. And what exactly is the P ratio of Indian market? Even after the crash, check out this. So Nifty 50 is still at 23,533, and if you look at the PE ratio of the market after the crash, it is still at 21.6, which basically means the Indian market is at least 50% more expensive than China. Now, the PE ratio alone cannot decide if the market should go up or go down. What's more important is the outlook. What people are thinking is going to happen in 2025. And in that aspect, Chinese and in fact the US market is looking a lot more attractive to investors, majorly these foreign investors. And why? Check out this news. China has announced this economic package, $1.4 trillion package over the next 5 years to tackle this local debt problem, along with that to boost their economy. And if this much amount of money money is actually pushed in the economy for and this money would majorly go to construction, which actually boosts the GDP, which means the companies that belong to construction, mining, they would just go up. A lot of roads would be built, a lot of other construction would be done, which would push the GDP further, which basically means the stock market would just skyrocket. And that is the reason the Chinese market is very attractive to these foreign investors right now. And that is the reason this money is flowing out of India. And this is exactly why you would be hearing this narrative. A lot of people have been talking about sell India, buy China, sell India, buy China. Exactly this is the reason. A lot of money is going into the economy. The government has finally decided to in fact increase their fiscal deficit to 3.8% from 3%. A lot of money is going there, which basically means the market would just go up. And being a retail investor, can you benefit from this? Yes, a big yes. I'll tell you at the end of the video what exactly you should do to capture all these gains. So watch the video till the end. Now, the second part I said was the US market is also very attractive. And why? Trump has won, yes, but there's another reason, which is why the market has been going up in the US as well. Check out this data. This is Fed data. So US Fed basically, if you don't know about the interest rate, here's the 30-second refresher. Interest rate and the stock market are very strongly related. If the interest rate go down, that basically means more money is flowing in the economy. That basically means the stock market will go up, a lot up. And interestingly, if you look at this data, the Fed actually reduced the interest rate in the September meeting. The forecast was around 5%, 5.25 actually, but the Fed actually dropped it to 5%. Then in November, the Fed dropped it even further from 5% to 4.75%. So the interest rate cut has happened in the US. Because of that reason, the market is more attractive because more money is flowing now in the economy. In India, we are still away from that. RBI has decided not to cut the interest rate. There's still a problem of inflation. So again, the US market has become more attractive because of this reason. Now, enough of this theory. The most important part of the video is what exactly you should do to capture all the gains and to handle your portfolio. Now, I'll tell you what exactly am I doing in the market, and if it makes sense to you, you can follow the same. So basically, in the last 1 week, I've invested close to 30 lakhs in the market, not just the Indian stock market, but in the market. I've invested 30 lakhs. I have divided this into 3 buckets, 10 lakhs each. And here is what I have done. A, Nifty has come to 23,500, which is a bit more sensible. Before this, it was trading at around 26,200, complete nonsense. Now it is at a really sensible valuation. And what exactly you should do? You can consider buying Nifty ETF. I have invested 10 lakh rupees in this ETF, which is Nifty Bees. Check this out. This is an ETF on top of Nifty, and you can consider investing here if it makes sense to you. The valuation is sensible. This money might give you 15-20%, even more than that in the next 1-2 years, because it is at right point. So you can consider bulk buying at this point. That's point number 1. Second, I said the Chinese market and the US market is very attractive right now. So we should definitely invest some money there. In fact, global diversification is very important for your portfolio. Extremely important. So can you invest in Chinese market? Yes. How? There are international ETFs. And which one am I investing in? The name is Hang Seng Bees. Check this out. You can do more research about this. This ETF has already given me almost 15% return in the last 1 month, almost 2 months, 10 to 15% return. Still at a very sensible valuation. You can consider investing here if it makes sense to you. The next couple of years, Chinese market might give you a lot of returns. It has not given any return in the last 3 years. Check the graphs. So it is at a very good point. You can consider investing here. Again, the next bulk buying can happen here. My next 10 lakh has gone to Hang Seng Bees. Third part, if you had been a viewer of my channel in the last 8 months, I have said this so many times, literally so many times, that the US tech is very attractive, extremely attractive. And here as well, I've invested 10 lakh rupees. Now, if you had watched this video of mine like 6 months ago, I was strongly suggesting this index fund, and I told that this is my favorite mutual fund. It would give me a lot of money in the next 5-10 years. If you had invested seeing that video, you would definitely be sitting at a profit of 50 to 70% right now. Then in this video, I was talking about the other ETF, which was also very, I think kind of my favorite again. And if you had invested here, you would have still got like 15% in just 1 month. Now, the name of the ETFs are Motilal Oswal Nasdaq 100 Fund of Fund. The ETF name is MON 100. and there's also an index one. The other ETF is MEFANG, Mirai Asset FANG Plus ETF. Nasdaq 100 is basically invest in this ETF, in this index, which is basically Nasdaq. Nasdaq comprises of 100 companies, majorly tech, but a couple of other sectors as well. So the risk is kind of minimized if you don't want to just invest in tech. That's MON 100, Motilal Oswal Nasdaq 100 Fund of Fund. If you want just tech exposure, this one is amazing, which is MEFANG. Now this one majorly invests in top 10 FANG plus companies. So majorly tech companies. Again, a great price point, a good position for the next 5-10 years. You can expect a huge return here as well. I have the last 10 lakh rupees. I have divided two parts. I have invested 5 lakhs in MEFANG and 5 lakhs in Nasdaq 100. If it makes sense to you, you can do the same thing. Now, this basically means I am buying a lot in the current market. There is no point to panic, literally no point to panic. I have not even sold one single unit of anything. There's no point. Don't sell anything right now. Nothing right now. It's a time to buy. Whatever money you have, if you had some cash positions, I was telling my people to have some cash position. If you already have, it's a really good time to do the first bulk buying. The market can correct more. Be ready for that, and that's completely okay. We are long-term investors. If it corrects, let's say more, let's say 5% more, we'll do another bulk buying. There's really rare chance if it will correct even further than that. I don't think that's gonna happen, but it can happen. Anyway, do the first bulk buying right now if it makes sense to you. Not a push, not a recommendation. Do your own research. I will do that definitely. I've done my first bulk investment. Right now, I'll do another bulk investment if the market falls more. No point to panic. Invest a lot of money. This might give you a lot of returns in the next 1-2 years. If you liked the video, please like it. Please share it with more people and subscribe to the channel. I will see you next week again with one more video based on how the market is behaving. I'll tell you what exactly I am doing. I want to be extremely transparent. So I'll keep telling you what exactly I am doing in the market. If it makes sense to you, you can do the same thing. Until then, keep investing. Thank you.